Inflation hits a 32-year high, opening the way for larger interest rate hikes. The federal budget receives a warm response, but there's anger over energy prices, and why the makers of Cadbury chocolate are trying to boost the wages of its cocoa growers. It's Thursday, the 27th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, got to make a quick mention of How Do They Afford That, our other podcast featuring Canna Campbell, the founder of Sugar Mama TV. I don't know if you have had a chance to listen to the new episode yet that was released yesterday. It is all about budgeting. And as I said yesterday, this is perfect timing because we've been talking a lot about the budget this week, but this is all about your household budget. And Canna has some fantastic kind of tips and your favorite, hacks,
yes,
on basically how to kind of manage your budget. And this is a really interesting conversation for me because I have confessed to Canna in How Do They Afford That I have 18 bank accounts.
Oh, no way, really?
Yes.
Oh, Michael.
And it's 18 bank accounts across 4 banks, would you believe? And
wow.
It is all tied to this budgeting system that I use. And so Canna basically kind of picks that apart and tells me why I am wrong and why there are so much more simple ways to do it and effective ways to do it. So it is really well worth a listen. And as you can see, I basically just hold myself out there to use really as a lesson of what not to do. Yeah. And Canna goes through it in kind of chapter and verse as to really effective ways of managing money. So How Do They Afford That is out now. That's the new episode. Find it wherever you listen to podcasts. And we've also put a link in today's show notes. But, Sean, we have something a little bit different today as part of our daily interview, which will come up after the show. You're speaking with Darren Hopkins and Shane Bell, cyber partners at McGrath-Nicol Advisory. The different part about this is the piece of audio that we play as part of the interview.
Yes, so we talked to Darren and Shane and they tell us the sequence of events with a cyber hack. And we get to the point where they say, so the criminals get in touch and they provide us with audio. It's the phone message a cyber criminal left on a senior manager's phone. This is a senior manager of a big organisation, basically threatening him to start negotiating or else. It's incredible audio. And what I think is amazing, it's a very pleasant female voice being very unpleasant. It's quite incredible.
Yeah, it is well worth a listen. That's coming up a little bit later on. The main story this morning, though, Sean, headline inflation has hit its highest level since 1990, which opens the way now for more interest rate rises in coming months.
Yes, the Reserve Bank yesterday got a very clear signal that interest rates need to move higher, and market economists are tipping a 25 basis point increase on Tuesday next week and another a month later. That would take the cash rate to 3.1%, though financial market investors reckon it could get closer to 4% sometime next year. The Aussie dollar surged after the announcement, pushing above 64 US cents, up almost 1 US cent. What that suggests is that investors reckon rates are going up more than they expected. Headline inflation rose 1.8% during the September quarter, pushing annual price growth to 7.3%. The past 3 quarters, Michael, have all exceeded any other quarter since the introduction of the GST back in 2000. The Reserve Bank's preferred underlying measure, which takes out volatile items, also rose 1.8% in the quarter, taking the annual rate to just over 6%.
Volatile items, what does that kind of thing include?
Well, it's basically things that are volatile, right? So sometimes there are food prices, sometimes there are fuel prices, which really jump up and down. And what the Reserve Bank is trying to do is get a trend, is kind of get the long term what prices are doing. So they take those sort of volatile items out.
Okay. All right. So the Reserve Bank and Treasury have forecast headline inflation heading towards 8%. Do yesterday's numbers kind of match those forecasts?
Yes. Now, the quarterly numbers were higher than expected, and the Bureau of Statistics figures shows that inflation momentum is still building in certain areas of the economy. That's the problem. It's not like we've peaked and coming off. We're still building momentum. Goods prices, in part thanks to higher building costs, gas prices and furniture prices, jumped nearly 10% for the year. Now, that's the strongest rate of growth in goods prices since 1983. But there's plenty of other categories where prices are still rising. And so maybe the Reserve Bank and Treasury forecasts now look a little conservative. One category during the quarter where prices went backwards, though, Michael, was automotive fuel, although it's still about 18% more expensive than a year ago.
Yeah, don't get me started on that one. What was the government's response to the numbers, Sean?
Well, Treasurer Jim Chalmers said the economy was in genuinely different and difficult times and the low inflation era was over. He said inflation is the number one dragon we need to slay, and he's correct.
All right. What about local markets? What happened yesterday?
S&P ASX 200 finished up 0.2% to 6,811 points. Once again, the rise was led by the real estate investment trust and utility sectors. Consumer staples and energy stocks were the worst performers. Wasn't a lot going on among the large caps. The banks were generally higher, while the big miners were mixed. Industrial property giant Goodman Group and toll road group Transurban jumped around 2%. Woolies dropped more than 3%. Coles was down 2.7%. Just quickly, a couple of interesting bits of corporate news. Whitehaven's share price fell 8% after it said it will start a new on-market buyback today to take the total amount of shares repurchased to 25% of the company. And agribusiness Costa Group's share price jumped 11% after private equity group Payne Schwartz Partners suddenly reappeared on its share registry. It now holds 13.8% of shares.
And what about overseas markets?
It's all about the US tech stocks at the moment. They fell sharply yesterday after some big companies, Google's parent Alphabet, semiconductor group Texas Instruments, and Microsoft, all disappointed investors. We're in the middle of the US quarterly earnings season, and the tech giants tend to lead the market these days. In after-hours trading, Google's share price yesterday fell more than 7% after revenue came in below market expectations. Microsoft lost 8% because it disappointed investors in terms of revenue forecasts. And Texas Instruments, which is the semiconductor chip market leader, fell 6% after disappointing analysts. Ahead of the announcements, the tech-heavy NASDAQ had actually risen to its highest level in a month. It certainly went the other way then. Brent crude is trading around $93 a barrel. Gold's heading towards $16.50 an ounce. Coal futures are trading under $400 a tonne. It's been about 6 months now that they've been at these high levels. You know, pre-COVID, they were closer to $50 a tonne. Now $400 a tonne. Pretty amazing, really.
That is extraordinary. When you put it like that, that is huge.
Yeah. I mean, you talk about the energy crisis, there it is.
Yeah, right there in that one stat. All right. We'll be back in a moment with the rest of the day's business news. Sean, you mentioned just before the energy crisis, and the big talking point from the federal budget over the past 24 hours is just how much energy costs are expected to rise. Broadly speaking, what was the response to the Albanese government's first budget?
Well, it was reasonably well received. Nothing flash, but it did seem to tick most of the boxes. The Coalition and Greens and the states, most notably New South Wales, were critical of aspects of it. What got most attention, as you mentioned, was the government's estimate on the cost of energy, up 20% in the first half of next year and 30% in the following year. That takes it to about 56% when you compound that over the next little bit. It upset many, particularly since the government promised to reduce power bills by $275 at the last election. That promise is dead, and Prime Minister Anthony Albanese said as much yesterday. Treasurer Jim Chalmers confirmed that the government is considering more energy market interventions, saying the government is looking at doing something that can take the sting out of higher electricity prices. Pretty much everyone welcomed the ambitious plan to build 1 million houses over 5 years from 2024, although some said it wasn't that ambitious, given we build about 200,000 houses in a good year anyway. And of course, the National Housing Accord had very little detail.
Sean, what I thought was pretty interesting was that the business community, which is not exactly the natural friend of Labor, was pretty upbeat about the budget.
Yeah, I agree. The Business Council of Australia said the budget was wise, given the global inflationary environment. Coles boss Stephen Kane gave the budget a general tick of approval, saying there were positive changes in terms of enabling more women to join the workforce, therefore helping alleviate the skills shortage. But he said his biggest concern were the remarks around soaring energy costs. And Wesfarmers' Rob Scott, the chief executive of that big company, also praised the budget.
It would have to be pretty encouraging for Treasurer Jim Chalmers to get that kind of reaction from business, wouldn't it?
Yeah, look, I think he learned a lot from the UK decision to increase taxes about 6 weeks ago, which ended up with the Prime Minister losing her job. He was much, much more sensible, and I think that probably sort of reinforced the need to be prudent.
Okay. Now, the Medibank cyber breach, Sean, the situation just gets worse by the day. Yesterday, the health insurer said it was unable to confirm if the hacker has actually left the company's systems.
Yeah, incredible. Already identified breaches have been closed, but there could be other, as yet unknown, breaches in the system. Medibank says it thinks the hacker has gone, but it just can't say that definitively. Now, the company's share price tumbled 18% yesterday when it resumed trading on the ASX. And Chief Executive David Koskar said data of all of its 3.8 million customers had been accessed by the criminals. But given the insurer is required to keep health records of adults for 7 years and children for 25 years, even more people could be affected. Mr. Koskar repeated that the number of customers affected will grow substantially from the 1,100 released records so far. Medibank said it expects a $25 million to $35 million one-off cost from the cyber breach, but it didn't really give an estimate on how much it might have to compensate its customers.
And the boss of Woolworths as well yesterday, Sean, apologised for the data breach at its subsidiary MyDeal.
Brad Banducci said the breach affected 2.2 million customers, though no payment, driver's license or password details had been accessed. MyDeal operates on a different platform to Woolworths, so no supermarket customers were impacted.
Coles yesterday posted a slight rise in first quarter sales, but warned that prices are going up as inflation hits both fresh food and dry goods.
Yeah, we got the Bureau of Statistics figures yesterday, and then we got the real world example from Coles. Now, the supermarket September quarter sales rose 1.3% to almost $10 billion. But food inflation jumped more than 7%. And that's very much reflected in what we pay when we go to the supermarket. Bakery products are rising in price due to higher wheat prices. Of course, that reflects the war in Ukraine. Fresh produce prices have jumped as well, particularly in fruit. Berries and bananas were two examples given yesterday. There's also higher costs in transport, including shipping and fuel. One thing that I thought was pretty interesting yesterday was the different ways people are doing their shopping. So online sales have fallen sharply post-COVID, but turnover at Coles Express, mostly petrol stations and smaller stores, have surged. Sales in the liquor business are lower, but certainly the shift has been towards those smaller Coles Express stores.
Sean, Comsec, the stockbroking arm of Commonwealth Bank, will pay a $20 million fine after overcharging customers on more than 120,000 occasions, totalling more than $4 million.
The federal court ruled that Comsec and another former Commonwealth Bank subsidiary were responsible for systemic compliance failures. Fines total $27 million, including the Commonwealth Bank's $20 million fine. The Comsec fine is reportedly the largest penalty ever handed down for breaches of market integrity rules. And also, Michael, just before we leave this story, ANZ has been ordered to pay a $25 million fine for failing to provide certain benefits it had agreed to give customers with offset transaction accounts under its break-free package.
Sean, it's always worth mentioning what Australia's biggest investor, the Future Fund, is doing, and it seems to be doing pretty well.
Yes, it is. Assets fell by $1.25 billion during the September quarter to $193 billion as the sovereign fund shifted more money into private assets and pulled back its exposure to equities. Now, that fall of 0.6% might not sound real good, but the actual share market was down 5%. The median superannuation fund was down 3.1%. So 0.6% is, relatively speaking, really good. The long-term performance of the fund is what really matters, and over 10 years, it's at 9.2%. That's well ahead of its target of 6.6%. Chief Executive Raphael Arndt said the fund was repositioning itself for a higher inflation environment with greater geopolitical tension.
Sean, how about this one? Criminal money launderers are funneling billions of dollars of dirty cash through pokies in New South Wales pubs and clubs every year because of weak regulation.
In fact, the New South Wales Crime Commission review called pokies a safe haven for money launderers. The Commission said it couldn't tell how much of the $95 billion fed through pokies in the state annually were proceeds of crime, but it was many billions, mostly from drug dealing. The Commission said the state government should impose similar rules to the tough new laws imposed on casinos in New South Wales. If it doesn't, money laundering could shift from casinos into pubs and clubs. Very worrying.
And South Australian Premier Peter Malinauskas says he is considering reverting to having some state-owned power assets 25 years after the Electricity Trust of South Australia was privatised.
Yes, and this just comes days after Victorian Premier Daniel Andrews said he'd do the same thing if re-elected next month. Mr Malinauskas said Western Australia was the only state that had been smart and kept its electricity assets under government ownership. Given energy prices are on the rise, urgent action is needed to try and protect households and businesses, the Premier said.
All right, moving on to overseas news now, and parts of the Chinese city of Wuhan have been locked down after several COVID cases were found, really highlighting the regime's determination to continue with its zero-tolerance policy.
That's right. Almost 1 million residents of the city are now in lockdown 3 years after the coronavirus emerged. All non-essential businesses have been told to close. The problem with zero tolerance, Michael, is that it totally hamstrings the economy, and that really is China's Achilles heel at the moment.
Yeah, it sure is. Now, Sean, this one, I like this one. The owner of chocolate brands Cadbury and Toblerone, among others, will commit hundreds of millions of dollars into a sustainability fund in an effort to reduce child labour.
Yes, modern slavery is a blight on global supply chains, and African nations are, rightly, becoming increasingly upset about child labour and pay rates in cocoa farming. Mondelez International, the owner of Cadbury and Toblerone, has now committed $1 billion up to 2030 on the problem. According to the World Economic Forum, cocoa farmers in Ghana have an average income of about $1 a day, which is more than the Ivory Coast, where it's 78 US cents a day. It really has come to a head. Those two countries have boycotted the World Cocoa Federation annual meeting, which is about to start in Brussels. Hopefully, this huge amount of money put towards the problem will at least start to fix it.
Yeah, hopefully so. Now, Sean, on a completely different topic, I had a bit of homework to do from the other day. We talked about We Are 8, which are supporters of this podcast, and you spoke with Sue Fennessy, who is an Australian entrepreneur now living in London. And basically, she has started We Are 8, which is a social media platform that is taking on kind of Facebook and taking on Instagram and the other giants with a very different approach. And my homework, really, that I actually kind of volunteered for. So, which is actually kind of like me, because I was the kind of student that would actually volunteer for additional homework. That may not surprise you to learn. And I said I wanted to have a bit of a look around on We Are 8 and kind of report back as to how it works. So, would you like to hear my findings?
Yes, please.
Okay, so I spent a bit of time on the platform, and it's well, number one, it was really easy to use. So I liked that. It is very visual in the same way that Instagram is, but it is really positive. And this is kind of what Sue spoke about the other day, is that it is all geared towards creating a social media platform that is free from hate. So I watched some videos on a bit of travel, kind of some planes obviously was part of that. A little bit of some movies. There was some movie scenes, Star Wars and the like. Overwhelmingly, it was very positive. But the thing that really kind of got me was that at the end of it, there was no kind of comparisons. Like, you know, where, say, on Instagram or others, you end up kind of comparing what you've got with what other people have. And this is kind of where a lot of those body image issues come in as well, that those platforms are really kind of designed almost to make users kind of feel bad. And that is not the way this worked. It was very, very positive. So that was my opinion based on using it for a little bit. The other thing that I like is that it kind of sets a limit of 8 minutes and then encourages you to go off and do something else. And I guarantee you will not get encouraged to leave Instagram or Facebook or anything like that. So that was another point of difference.
Yeah, I mean, Sue Fennessy, the founder of We Are 8, who we interviewed, she would be loving what you're saying at the moment, Michael, because that is the whole thing. She wanted a social media platform which was positive and also kind of allowed people to live their normal lives. A bunch of advertisers have already jumped on board. It's really interesting to see on their website who is part of it. And I've got to tell you, I actually got an email from, he's a friend of mine. He's the CEO of a major retailer. Like, you would know the brand. And he just said, "Hi, Sean, just wanted to reach out and say what a fascinating interview this morning's podcast was." He's talking about Sue Fennessy. "Have flagged it to our online team locally and globally. I think it ticks all the boxes for blah," the name of his company.
Wow.
Isn't that fantastic? When you get that sort of feedback, obviously, and this is a major retailer, obviously that's the sort of environment that they want to be involved in. And I think that's really, Sue and the team at We Are 8 deserve all the plaudits and hopefully all the advertising support they can get.
Yeah, and I will say one thing as well, and obviously We Are 8 are supporters of this podcast, but the thing that scares me about social media is my kids are very young and they are kind of years away from using social media, but I'm terrified about the day when they do venture on there and kind of what kind of environment that they will be heading into. What I find encouraging about We Are 8 is that there is the potential now for that to change, that it won't be this really quite frightening, really nasty place anymore. And I find that encouraging. One last good thing, I got in early enough on We Are 8 that I got my username. So I have a very common name. I have never been able to get Michael Thompson on anything. I got in early. I got in a while ago. And so if you're thinking about it, jump onto We Are 8 and nab your username before someone else gets it. That was basically the highlight of my day when I got that.
Yeah, I can imagine that. Sean Aylmer never had any problems.
No, I can't imagine you would. Anyway, look, I had to report back. I said the other day that I would have a bit of a play around and see how it all worked, and that was the basically the results of my extracurricular study.
Well done. Good work on the homework.
Thank you. Now, up next is the Fear and Greed Daily interview with Darren Hopkins and Shane Bell, cyber partners at McGrath-Nicol Advisory. It is a very good time to be having this conversation.
It sure is all about cybercrime. It's what we're all talking about at the moment, and particularly that audio, the recording of the cyber criminal talking to the manager, demanding that he negotiate. Incredible.
It is a cracker. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 27th of October, 2022. Make sure you're following the podcast and don't forget to check out that latest episode of How Do They Afford That wherever you listen to podcasts, and it's also in the show notes. I'm Michael Thompson, and that was Fear and Greed. Have a great day.